The FOMC minutes are due out at 7 o'clock UK time on Wednesday. Now, since the very strong non-farm payroll print on February the 3rd, you can see here with the headline came in as an exceptional 517,000 jobs added, well above the 305,000 maximum expected. Markets have been pricing in higher rates from the Fed as being expected. We also had this very strong ISM services print on the same day, which helped lift the dollar. We've then seen pretty decent sentiment from the US Michigan consumer report with 5-year and 1-year inflation expectations all ticking higher. We had a very strong retail sales print. We also saw headline inflation slightly above markets' expectations, and the core PPI and the CPI were both higher than markets were expected, and particularly the month-on-month print was just sort of ticking just slightly higher, showing inflationary pressure was still there. So all these kind of data points have been leading analysts to expect higher interest rates from the Fed, and we've been seeing stir markets expectations ticking steadily higher since that February the 3rd very strong non-farm payroll print, and now expectations are for a more aggressive Federal Reserve. This has been a natural headwind for US stocks, which is why the S&P 500 has been finding resistance around this 4150 region. Now, on Wednesday, the latest set of Fed minutes from the Fed's meeting will be released. So will they contain any surprises? Now, from a seasonal perspective, just note that the S&P 500 over the last 25 years, spanning 209 events, the S&P 500 has been prone to weakness out of the minutes release. You can see here the red line, which signifies the release of the minutes, and the index shows that the S&P 500 tends to fall in the few days following the event. So does this make a hawkish surprise in the minutes, if there is one, a good opportunity to sell the S&P 500 on Wednesday out of the Fed's minutes? Major trade risks. The major trade risk here, of course, is if the minutes contain a dovish surprise, which makes market once again expect a pause from the Federal Reserve. Remember, don't just trade it, but seize an exit.